The iShares 5 to 10-year investment-grade corporate bond ETF, ticker symbol IGIB, is an exchange-traded fund, ETF, that seeks to track the performance of the Barclays U.S. 5 to 10-year corporate bond index. The index is made up of investment-grade corporate bonds with maturities between 5 and 10 years. Investment-grade corporate bonds are issued by companies with a strong credit rating, and are considered to be less risky than other types of bonds. The 5 to 10-year maturity range provides a balance between the potential for higher returns of longer-term bonds and the stability of shorter-term bonds. The ETF is managed by BlackRock, one of the largest asset managers in the world. It holds a diversified portfolio of corporate bonds, with the top holdings as of 2020 being bonds issued by companies such as General Electric, Cisco Systems, and Ford Motor Credit. One of the benefits of investing in an ETF like IGIB is the diversification it provides. By holding a variety of corporate bonds, the fund reduces the risk of any one bond defaulting and causing a significant loss for the investor. Additionally, the ETF structure allows for easy buying and selling on the stock market, similar to buying and selling individual stocks. The expense ratio for IGIB is 0.15%, which is considered low for an ETF. This means that for every $100 invested, the annual management fee is 15 cents. One potential disadvantage of the fund is that it is subject to interest rate risk. When interest rates rise, bond prices fall, and the value of the fund may decrease. However, the fund's focus on investment-grade corporate bonds and the shorter maturity range may help mitigate this risk. In summary, the iShares 5 to 10-year investment-grade corporate bond ETF, IGIB, is an exchange-traded fund that provides exposure to a diversified portfolio of investment-grade corporate bonds with maturities between 5 and 10 years. The fund is managed by BlackRock, and its expense ratio is low. However, it is subject to interest rate risk, similar to other bond funds. It may be suitable for investors looking for a balance of stability and potential for higher returns, and who want to gain exposure to corporate bonds without purchasing individual bonds.